Did you know there's a specific loan program dedicated specifically to medical professionals that doesn't require a down payment or private mortgage insurance? Yes, this means you can potentially have your home 100% financed. Stay tuned to learn more. Hey everybody, my name is Lillian Chuckweezy. Welcome to my channel where I talk all about buying and living in Philadelphia and the surrounding areas. I give tips and advice to help you along your home buying journey, and if you haven't done so yet, make sure you go ahead and hit that like button and subscribe to the channel for more videos just like this one. And if you're ready to start the process of purchasing your first home or your next home, make sure you go ahead and reach out to me. I'm a licensed loan officer and I'd love to help you buy a home. So I know that last month in March, there were a lot of people, including some of my personal friends who just graduated from medical school or started their residency. So congrats to you guys. So if you're looking to become a doctor or a medical professional, or you're already one, then you absolutely need to pay attention to this video because I'm gonna break down exactly what a physician's loan is, how it works, and how you can qualify. So a physician's loan, also known as a doctor's loan, is a mortgage specifically meant for medical professionals that does not require a down payment or private mortgage insurance, which is phenomenal. Other loans usually require borrowers to pay private mortgage insurance if they are making a down payment that is less than 20%, but a physician's loan is different because it makes it possible to avoid a down payment and avoid PMI. Now this is extremely helpful for doctors who are just entering the field because usually when applying for a regular mortgage, this early in their career, they tend to have a large debt to income ratio after medical school and may not actually be able to provide enough proof of employment and income if they just graduated or started their residency. So this is what usually puts doctors at a big disadvantage when applying for a mortgage. However, physician loans create special allowances for the unique circumstance of a medical career. Now, I know what you're probably thinking. You're probably thinking that it doesn't make much sense for a lender to allow borrowers to take on a mortgage when they have such a large amount of student loan debt and they're just starting their careers. But the reason why lenders are willing to look past those negatives is mainly because of the most likely potential upside of their career income, obviously. It's no secret that doctors have the potential to make a whole lot of money throughout the life of their career, and lenders view them as less likely to default on their mortgage payments despite lacking significant income in the early stages. So let's look at who exactly can get a physician's loan. Now, typically MDs and DOs. Some lenders will also lend to other healthcare professionals such as veterinarians, dentists, orthodontists, and more. A physician's loan is very beneficial for doctors and medical professionals because of the 0% down payment, as I mentioned, and no PMI and flexibility with employment and their debt to income ratio. PMI, or private mortgage insurance, is insurance that actually exists to protect your lender if you stop making payments on a loan. So it's not insurance for you, it's really for your lender. And lenders usually require private mortgage insurance on your loan, usually if you put down less than 20% of the purchase, and it's based on interest rates, so it varies, but it usually costs between 0.5 to 1% of your loan amount per year, which can be hundreds of dollars extra on your monthly payment depending on the size of the loan. So you can imagine how beneficial it can be for doctors to not have to pay PMI when buying a home. So a physician loan typically has high limits up to $1 million or more depending on the mortgage lender, so you definitely get a lot of flexibility on purchase price. Quick pause real quick, guys. If you are liking this video, please go ahead and hit that like button and subscribe to the channel. Now, your debt to income ratio is a percentage of how much money you spend on expenses versus how much money you actually make. And lenders pay close attention to DTI because they want to make sure that they are working with borrowers who have a manageable amount of debt to where they can easily manage their monthly mortgage payment without having to stretch their pockets too thin. So if a borrower has a lot of debt in comparison to their gross monthly income, lenders will actually view them as very risky because their student loan debt would far exceed their income initially. Keep in mind, lenders require more than a degree to qualify borrowers for a physician's mortgage loan. They still need proof of employment and income, but they are more flexible with these qualifications. Now, lenders who do provide physician loans, which my brokerage does work with lenders who provide this loan, will usually accept a contract of employment to verify a doctor's income if they do not have pay stubs or W-2s that reflect their current position. And another great thing about physician's loans is that they can be used to actually refinance a property. Now, I know we've talked a lot about the pros, so let's get into some of the cons because I want you guys to see both sides of the coin. So physician's mortgage loans usually don't offer a fixed rate, which means that you will have an adjustable rate or a variable rate, and your rate will most likely be slightly higher than it would on a conventional loan. So when you are buying a home, it must also be your primary residence, meaning that you have to live in that home for a majority of the year. This loan typically cannot be be used to finance a second home, an investment property, or a condo, or a townhome, or multifamily properties either. And usually because your home can be 100% financed, you won't have much equity if you decide to sell early on. But depending on how long or short you plan to live in the property, these cons may not mean that much to you. But the only way to truly find out is to get in touch with a mortgage loan officer like myself, complete a pre-approval application, and whether or not you decide to go with a physician's loan, once you submit a pre-approval application, I will be able to thoroughly go through your finances and present you with the best loan options for you and your situation. And honestly, you might go through the process and realize that a conventional loan or an FHA loan may be better for you, but again, we won't know until you submit a pre-approval application, and we can get some more details on that. So if you're ready to get started and you're interested in getting the process started of purchasing a home, then make sure you go ahead and reach out to me, and I'll get you started on that pre-approval application and get you going to purchase your first or your next home. So there you have it, guys. I hope this video was valuable to you. If it was, please go ahead and hit that like button, subscribe to the channel, and hit that notification bell so you don't miss out when I drop the next video. Until next time, guys, stay safe and stay blessed.